California's homeowners insurance market is in a crisis, and it could get worse before it gets better. More and more homeowners are finding the option of last resort is now their only resort. And as our Becca Habecker shows us, it's about to get more expensive for a lot of people.
It's a mental health toll every single day having to make the phone calls.
Aurora Millette is managing partner of Sky Insurance Group, an independent insurance broker based in Rockland. I spoke with her from Tennessee, where she moved earlier this year due in part to California's homeowners insurance crisis, something she sees firsthand as she works with her clients here.
I just helped a senior yesterday that was basically telling me that if I couldn't find her something lower, she had to choose between her insurance and eating.
California is facing a crisis of affordability and availability when it comes to homeowners insurance. As of September, since 2022, 7 of the top 12 insurance companies in California's homeowners market have paused or limited new business in the state. They cite a growing risk of wildfires, rising costs of home repair, and rules meant to protect consumers, which they find restrictive.
The exodus started to happen where a lot of insurance companies just left altogether in California.
For homeowners who can't find any other insurance, there is something called the California Fair Plan. Known as the insurer of last resort, it is becoming tens of thousands of homeowners' only resort. It only covers a few perils, including wildfires, so homeowners need to buy a wraparound plan for other coverage. It's also usually more expensive than insurance bought on the private market, and the price for many is about to go up, starting with those renewing next month.
California Fair Plan has it capped that they will not see more than 100%. But it can still be very impactful, especially with those, if they're already paying $9,000 a year for the Fair Plan, that can easily jump to $18,000.
That's because the California Department of Insurance recently approved a Fair Plan rate increase of 15.7%, but that's an average across the state. Some people in the most wildfire-prone, high-risk areas could see their rates as much as double. A California Department of Insurance spokesperson told me, according to Fair Plan data, most policyholders would see a premium change between a drop of 35% and an increase of 35%. Our goal is that more people find a policy in the normal market, so the Fair Plan truly is a last resort, not a first.
And Becca Habecker joins us now. And Becca, there is a way for homeowners to save money on the Fair Plan, but it costs money to save money, right?
Yeah, there's a list of wildfire protections known as home hardening people can do on their property. Home hardening includes tree trimming, upgrading to multi-paned windows, moving sheds and outbuildings more than 30 feet away from the home, and more. A homeowner can also be part of something called a FireWise community and be potentially eligible for a Fair Plan discount there. Now, the Department of Insurance says similar discount programs will be coming out for private insurers as well. More insurance market reforms are in the works, Alex, as we have reported here, and as we'll be reporting on more in coming weeks.
And I want to mention, Becca has talked with so many people in the community who are scared and frustrated with the state of homeowners insurance. So we will keep up this reporting. Thank you, Becca.